Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Welcome, everybody, to another Small Cap Discoveries Zoom call. Today, we've got Doug Dyment, CEO of Gatekeeper Systems. Gatekeeper Systems trades under the TSX Venture Exchange under the symbol GSI. Closed today, roughly $1.42. It's got 104 million shares outstanding, so almost $150 million market cap. Doug, that's a far cry as far as market cap from the first time we had a chat. I think you were probably $6 or $7 million market cap at the time. So obviously a lot has happened since we've got to know each other, and certainly in the last 6 to 12 months, even more has happened in a shorter period of time. So as we were kind of joking before we went on air, another overnight success that's taken a good 10 years or so. So congratulations on where you're at right now. We've got you on here so that we can get a real solid update. So we'll get onto that. But before we sort of do that, just remind everybody what Gatekeeper is all about.
Sure, sure. Well, first of all, it's great to be back with you, Paul, and you're right. It's taken time to build a company, and but we've got some, the building blocks that we put in place several years ago are they're starting to pay off quite nicely, right? So we're finally starting to see some of the some of the strong interest come into our currency, which is a wonderful thing for shareholders and employees and of course directors. So just maybe a quick update for some of your listeners, viewers that don't necessarily know a lot about Gatekeeper. Gatekeeper is a technology company. We protect people in transit. We're a video and data solutions company for school buses, transit, and smart city. And our platform, even though we have a big focus on transit and K to 12, it can be used in any city vehicle. And so that'll be part of the future growth as we move forward. And we're one of the leaders in the vehicle video safety solutions, like I say, for school buses and transit. We use intelligent video and data, and we provide safer transportation environment for children, passengers, and drivers in multiple transportation modes. The revenue really comes from our product or our system sales, and we also have a monthly recurring hosted solutions revenue, which is driven by AI-assisted video analytics for incident management and storage. We recently just launched about a year ago a new data center down in Philadelphia. And our goal is to get as many of these mobile data collectors out there as possible and then start monetizing the data. So we're starting to see quite a bit of momentum on our subscription model, which has caught the interest of the capital markets. So one of the things I want your investors to realize is that Gatekeeper has really moved away from being a manufacturer ourselves, where years ago we did all the manufacturing and the building, and it's just too heavy a lift. So we've partnered now with offshore companies to provide our system solutions under our brand, under our design. And then really our engineering teams, what we do here in Canada is we focus on cloud-based applications to really monetize the data as we move forward. That's part of our structure. And since we were able to do that, we're able to move to market a lot faster, with these system solutions. This is a new area that we haven't discussed in the times that we've got together with you, Paul. It really talks about the total addressable market. And in school buses, there's about 534,000 yellow school buses in North America. Transit vehicles, about 186,000. And on the rail side, you're looking at about 15,000. What we're finding with our platform as a service business model is that revenue is now averaging about $5,000 per school bus. And that doesn't include any of the recurring revenue. And the transit vehicles, they're more revenue per bus, about 10,000, and then rail can get up to about 30,000. So it's a real nice mix of revenue there, per vehicle and per train. And that represents about, in the school bus market, about a $2.7 billion marketplace. Transit vehicles are about 1.8 billion, and then rail is about a half a billion. So if Gatekeeper was able to get 25% market share, it represents about a $1.2 billion opportunity for us. Now that 1.2 billion takes into account the replacement life cycle of the product, which we feel on average, we're replacing the technology, certainly on school buses, every 6, 8, 9 years. Buses typically will last anywhere from 11 to 13 years. So the nice thing about our markets is that there's a replacement cycle there for new technology coming in. So we got some nice tailwinds going here. The overall system, the platform as a service business model, this is what it looks like. On the left, you've got all the sensors, the cameras, stop arm cameras, internal cameras, cameras that get installed on the outside of the vehicles. They connect to the mobile data collector, which is the yellow device there. And we have a number of those, different models and whatnot. And that resides on the vehicle itself. So think about that as almost like a robust server located on the vehicle. That's where all the video is recorded, integrated with GPS, vehicle sensors, voice, and once we collect that, then we offer up our customers really a free software application that gives them basic video management capability. But if they want to move to wireless, and by the way, 90% of our quotes going out now include wireless, then they have to opt into our G4 Enterprise software. When they do that, we load that software up on the server and we charge $29 per bus per month to give them live streaming and a unique health check feature that has built-in AI. That basically the way that works is when there is somebody spray paints a camera, and that goes on all the time in the mobile application. Our AI detects it, sends a signal to our command center, and we can get a tech out to fix the problem before the bigger problem happens, which is missing video. And that can cause false liability claims and things like that, right? Or lawsuits because of them not having the video when they should have had it to protect their passengers. So that's how the system works. And now the mobile data collectors, this is a key piece for us. We update this every year, by the way, and our fiscal year is coming up here at the end of August. But at the moment, we have about 57,000 of these mobile data collectors that are on vehicles. One mobile data collector for every vehicle. 53,000 of them are in that yellow category, which is the school bus side. And then we're already up to about 4,000 in the transit. Transit's a little bit smaller, but remember the revenue per transit vehicle or train is quite a bit more than it is in school bus. We feel we have about 10% market share representing that 53,000 mobile data collectors when you look at 534,000 yellow school buses in North America. And we have about 3,500 customers, most of which are in the K-12. I'm going to talk a little bit about the transit market momentarily here, but we have about, like I say, about 4,000 of these devices in trains and buses. One of the largest accounts is obviously our Southeast Pennsylvania Transit account. And that's about to change given, one of our news releases that we put out. Won't be able to talk a lot about what's about to happen. But we feel like we're pretty close to putting a news release out on one of the largest transit agencies or the largest transit agencies in North America here soon. So you can see the revenue by segment. The recurring revenue is in black, gray is transit, and then yellow is school bus. And of course, you and I have known each other, for quite some time, Paul. So you can see the growth, in the K-12 as well as the transit side and the overall growth. The black area there, the recurring revenue, that's where we have a big focus. We want to drive as many of these mobile data collectors as we can and continue to drive that recurring revenue. Now the interesting part here is that we put a significant investment in our data center in Philadelphia, knowing that this was going to happen. So last year we did about 37, almost 38 million in revenue and about 4.2 million in operating profit. So it was a good strong year on top of some growth years in the past. And the nice thing about our strategy here relating to gross margin, if you will, is at the moment, when we put a mobile data collector on at $29 per bus per month, we're roughly around 53% gross margin. Last year, when we launched the data center, Paul, we only had about 300 devices that were delivering revenue. Fast forward to where we're at today, we're already up to 3,500 in less than a year, and there's another 500 that are going to be coming online here shortly. So we want to grow that number to 10,000 as fast as we can. And once we get to 10,000, because of the investment we made in the data center, we own all the hardware. We're able to scale that margin from 53% up to 88%. So the recurring revenue piece and our strategy is we're pretty excited about it, right? Because we got an interesting market. K to 12 doesn't have a lot of IT resources to handle the amount of video that gets thrown at them. So we feel like there's a big opportunity, not only in our initial launch of our hosted service, but future video management services. So that's the plan here, is to evolve to a data type company. I don't believe that we're going to be a full SaaS model. You're going to probably see us be more of a hybrid, right? Where we've got a portion of our revenue that is system sales, and then a portion of it will be recurring. Now, one of the things that that we're finding is that there is some interest in some areas of the country for a full subscription model. So it'll be interesting to see how that evolves as we move forward. But right now, it's early days on recurring revenue, but the trend is really starting to really starting to catch some nice momentum there. So that's been the goal, and I think that's one of the reasons that you were attracted to us in the first place, was that we really wanted to get to profitability, and it's been a little bit lumpy from quarter to quarter at times, given things that we just don't control, which are some of these contracts, right? And the timing of them landing. But it's because of the mix in the revenue, we're starting to see some interesting foundations building, in our sales funnel. Like, our sales funnel now is upwards of, just in transit alone, it's over 200 million, and school buses up over 100 million. So we're excited about the growth here. This slide gives your viewers a representation of the geographic bias of where all our customers are. We have relationships with all of the vehicle OEMs. In school bus, it's Blue Bird, Thomas, International Corporation. We're already designed into New Flyer buses at the factory. So those types of relationships help us to drive our business. Not sure if your viewers are aware of this, but this is new groundbreaking legislation that was just passed recently in Canada. Represents a $200 million opportunity. And by the way, that's Transport Canada's number. That's not ours. And Gatekeeper was involved in a pilot study for better part of 3 years. They tested 3 pieces of technology that we had. One was our forward-facing camera with built-in AI. Then we had our stop arm camera solution, and then we had our 360 surround vision system. And that 360 surround vision system is what they built their legislation around. So starting in 2027, every new school bus is mandated to have this system on. So we're excited about that opportunity, and we are currently working with all of the vehicle or the bus OEMs and the school districts to make sure that that Gatekeeper has good, or they have good visibility to our technology. And given that we were part of the pilot study, our brand is well known in Canada. So it represents about 65,000 school buses from 2027 to 2036, I believe, that will be affected by this legislation. So it's good. It's the first time in the history of the market that this type of legislation has been passed. An example of why it's passed is in the US, there was a child that crawled underneath a school bus. Bus driver didn't see him. He's in the blind spot to get his ball, and bus driver took off and unfortunately killed the kid. So these are the types of technologies the Gatekeeper has that can really save children's lives. On the AI side, this is all part of our strategy. We want to get more intelligent out of the edge because we're bringing so much video back across the networks. We have to be smarter on what video we actually send back, right? So we've added AI into our Student Protector program, which is our license plate reading capability for the stop arm camera business. We have an AI dash cam solution that basically does proximity warning for drivers. Pedestrian Protector is really interesting. I just talked a little bit about how that works with a 360 system, but the Pedestrian Protector, it adds a new layer of AI that can determine when a pedestrian is starting to get close to that blind spot and communicates to the driver. I really believe if we would have had that installed in that school bus, we would have saved that child's life. But these are just some of the things that we're doing. Cell phone detection, we tested in one of the largest transit agencies recently where we caught two of their drivers texting both hands while driving the bus with a full load of passengers, and they're steering the bus with the knees while they're texting on the camera. So that type of technology, I believe, moving forward, will allow us to provide incidents that transit agencies, school bus agencies, they won't even be aware of going on, right? So I think that's a lot of value moving forward that will help transition us to more revenue per bus. So we got a comprehensive, school bus technology portfolio here. The Student Protector is a high-speed multi-lane license plate reading system. There's going to be approximately 40 million of these illegal, passings per year in the U.S. And the average ticket's price is $250. You and I have talked a little bit about this in the past, but for some of your viewers that may not know Gatekeeper all that much, this gives them a high level view of some of the systems we have. We got a cloud-based application that does all of the ticketing, so we can be the end-to-end solutions provider at the county level and collect the evidence, issue a citation, and then collect the money and share it with the county or the school district and provide a real good service for providing safer environment in and around the school buses. We talked about the 360 surround vision, internal cameras, and student Wi-Fi systems. A little bit of information on our school bus product line. So the transit market, 87% of transit buses now have video cameras, but don't let that fool your investors, because the reality is there's a huge technology refresh going on, and we're right in the thick of it, right? So 108 billion in U.S. federal funding announced in 2021. Gatekeeper now has over $40 million in revenue coming out of the transit market. I'm going to talk about some of our successes here that we've just recently announced. And we have about 60 transit agencies using our technology now, but more of the tier ones are starting to pay attention to us. And once you start getting into your tier ones, such as a SEPTA account, which is the next slide, that's when the revenue can really start to build, because these large accounts, they just seem to have all these types of projects that they need taken care of. And if you're a trusted vendor such as Gatekeeper is, that's how you can really start to drive revenue. SEPTA saves about $20 million a year in false liability claims using our technology. So it really starts to pay for itself pretty quickly when you've got, those kind of legal fees that get reduced because your video technology is as strong as it is. And so probably over 40 million in new business came from is coming out of SEPTA since 2018, and I think that's about when we met, was in 2000, maybe 16 or 17. So it's taken time to build the business, but like I say, it's starting to get some traction. Toronto Transit, this is the train project. We went head to head with some top competitors, and they awarded what they call as a proof of concept. It's about a $400,000 fixed price contract. And really, this is similar, Paul, to a school bus stop arm application, where the trains come to a stop, vehicles on either side of the train are supposed to stop, and people are getting on and off. And they've had some hits, pedestrians run down. So they put out an RFP, Gatekeeper responded. They were going to award 4 trains, 2 trains each, to 2 separate companies, and then run a 10-month pilot. But because we were so advanced in our tech, they awarded the Gatekeeper only. So we got that deal. And the interesting thing here is they're gonna run it for 10 months. They're using our TIMS application to only produce reports. They're not going to issue any citations yet. And then they're going to look at how many near misses, how many issues they have, and potentially outfit to the entire fleet moving forward. So that project has some potentially enormous lift. Further to that, they just put out an RFP or just closed an RFP for the internal video systems on those trains. This is different than the automated streetcar enforcement system, which is called ACES. The company that wins the internal camera systems must integrate with ACES, the winner of ACES, and Gatekeeper is the winner of ACES. So we feel we've got a good opportunity to win that project as well. So we've got SEPTA number 6. Toronto Transit is number 3 in North America, and we're well on our way to starting to land more transit agencies. Automated lane enforcement is another AI-driven application. The whole reason for this, as cities start to add more dedicated transit lanes, they got to be able to get those buses and get their passengers from point A to point B unencumbered. So vehicles that are in those lanes, either parked or moving, when there's legislation passed at the city level, that's when agencies can use our technology to capture the license plate, pump it up into the cloud. We match the license plate with the vehicle owner in our TIMS application, and we issue a citation. So these types of applications in video enforcement, I think, are going to grow in popularity because they're creating, a smoother operation flow while driving revenue for the city. The FRA ruling, this is another area that has just really come about, and quite frankly, the NTSB did an investigation in a train wreck in Philadelphia, and the recommendation was to put crash-hardened memory modules as well as other types of visual devices on the trains. And so SEPTA was out in front in leading that initiative, even prior to this new ruling coming from the FRA. So Gatekeeper has installed probably more crash-hardened memory modules on trains than any other company in North America because of our work with SEPTA. So the FRA ruling basically states that by October 12, 2027, every commuter rail in the US has to have crash-hardened memory, forward-facing locomotive camera, and that has to meet some certain requirements. And there's a few other bells and whistles in there as well. But we see that as a potential $250 million opportunity for us. And just recently, we put out a press release pointing all investors to the biggest transit agency in North America that put on their website that they are recommending a Gatekeeper for a sizable award, and we are still awaiting that contract. And once we receive it, we'll be in a position to press release and tell the market in detail more about the project. But we feel that opportunity is really, I can't tell you how much due diligence this organization did on Gatekeeper. And so really looking forward to talking more about that, post-contract reception. So this talks a little bit about our overall plan, the overall strategy, moving towards smart city. I think you know this, Paul, but this is probably for your investors. I'm a big believer in Gatekeeper developing more AI and taking dumb mobile city assets and making them more intelligent. A couple of applications to think about for your investors. In Los Angeles, they're using their garbage trucks to have a 360 system to identify when people are in blind spots. But now what they're looking at doing is putting sensors, outbound looking video sensors that use AI to determine where homeless people are as those waste management trucks move around the city. I thought that was a really cool application. And then further to that, in California, we were installing a stop arm camera system, and California Highway Patrol came up along with Department of Transportation to approve the installation. And when California Highway Patrol seen our system, they were interested in us integrating with their Amber Alert. So if you think about it, Paul, the way that our system is designed, School bus comes to a stop, stop arm is engaged, and then there's a violation. Car passes the stop arm. Children's lives are at risk. Well, that's one application. California Highway Patrol were interested in us integrating with their Amber Alert because what they thought was as the bus is driving down the road, if we have our system on, we're still looking at plates. And if we get a match with the Amber Alert, the bus is already, our system's already recording date and time, GPS. They'll know where the bus is. They'll know the time and date that that vehicle that they've been looking for passed the bus, and they can deploy the forces. I thought that was a brilliant application I hadn't thought about. And so I think there's a significant opportunity here as we move forward outside leveraging our existing technology in our niche markets, but also expanding into, other mobile markets. I'm going to talk a little bit about SEPTA before I get into the financial slide here. Um, Gatekeeper is spec'd on 3 train deals. 2 of them, the RFPs have closed, one of which was won by Alstom. We've been negotiating with Alstom now for the better part of a year and a half, and we're pretty close to closing that off. Alstom does business in over 70 countries around the world. We will be designed into their train architecture. Our goal is to leverage that OEM to get after more of a global approach, right? And start once you're integrated in, if you're a good supplier, you have an opportunity to get other projects. So that's our goal. And we use SEPTA to spec us, and Alstom now has to come and use us. And that's how we've been developing that relationship. Hitachi, so Alstom is the second largest train manufacturer in the world. Hitachi won the Frankfurt line and we're spec there as well. So we'll be going through the same process with Hitachi. And then the third line hasn't come to RFP yet, but we're spec there. So this train business that we have at approximately, 25, 30,000, sometimes higher than that per train, really has some interesting opportunities for us. We've just bid a deal. I won't name the city, but it's a big train deal and it's in the neighborhood of 100 million. So we've got a real cool mix of customers. In K to 12, we have over 3,500 customers, and a lot of them, are not buying every year, but they're still our customers. And you're looking at $5,000 per bus per month. Plus, we've got runway, to get up to 10, 20, 30,000 mobile data collectors delivering recurring revenue. And again, right now we're at 3,500, and we're going to be at 4,000 here by the end of August. But if you look at that, so that's the K to 12 mix. And then if you look at the transit mix of revenue, it kind of reminds me a little bit of PNG, of Kraken. Different market, but some significant large projects. I know they're in the defense business, but we've got the same kind of makeup, right? So we got our meat and potatoes revenue, and then we've got our large project revenue. And at the moment, we're solely focused on North America with a little bit of interest in different countries. Hopefully, we're going to have a deal come in soon here in a new country that we think we're going to be doing business in. But that's going to be part of our strategy to go after global sales. So shares outstanding, as you said earlier, about 104 million. That's after this recent bought deal financing. And stock options about 4.8. Everything is in the money, so fully diluted. Your investors should count on fully diluted market cap. I think market cap today we touched about I think it was $1.48 a share, so getting pretty close to 150 million. Revenue for last year was about just under 38 million. Fiscal Q3. It was about 7.5 million. That was up about 16% over last year's Q3. Margins are holding quite nicely based on our manufacturing strategy. So we're up about 49% on gross margin. And again, let's not forget, I want to repeat it, as we push that data play, we get to 10,000 units. Our margin on the data goes from 53%, where it's at right now, up to 88%. So that's a big piece of our strategy. Still a little bit of an operating loss. I'm not really too concerned about that. We're we are investing in the business, and that's part of the reason that we raise money here. At $1.20 a share. Like let's not forget that, approximately a month ago, our stock was trading at 40. To get a bought deal financing, in the barn at $1.20 a share, that was only I negotiated that. That was basically it was about 8% below the 10-day VWAP. That was a real tough financing to price because of how the stock was moving around so much, right? But I felt like our shareholders got a real good deal, and the stock's been trading above the issuance price since we closed it. It never did trade below it, right? Really happy about that, and lots of interest in the business from the institution. Never done a brokered financing, as you well know, Paul. To get a bought deal on our first brokered financing is a little bit unusual. And yeah, just lots of interest. We left a lot of money out there. Could have taken a lot more in, but carved everybody back, and now we got the institution support, at least in Canada, and they've been coming in the family funds in the U.S. for the last probably the last 6-8 weeks. Paul, I don't know if you looked at this, but there's been over 33 million shares that have been bought in the last 6 months in the US. 33 million. That's a lot of stock. I expect when I fly into Boston on Sunday night, I'm going to be able to find out who actually owns this. Right? So looking forward to it. So working capital, this is 15.6. We're probably sitting on 16 million in cash now, approximately. And we're really putting our heads down to really invest that money strategically to grow our business and accelerate our growth plans. Board of directors still stays the same. Myself, Charlie Bruce, David Stumpo, we've got good expertise there. We've got a couple of placeholder seats that we'll be looking at filling as we move forward. And the management team, pretty tight VP team with Jeff Grubin running the transit group, Jason Harris, the student protector programs and school bus. Val is head of the K-12 side of things, and Doug Fraser, former global product manager for Honeywell. He runs our R&D and product side of things. So that's it. I went through the whole deck. Didn't think I'd get through that.
Fantastic, Doug. Reminder, everybody that's listening, if you've got questions, as always, please use the chat function and we'll make sure we ask the question. Like we've said it a couple times, you've come a long way since we first started chatting. Some really, really good progress here over the last little while. I imagine in that time frame, the challenges or kind of what keeps you up at night has been changing. Doug, right now you've got plenty of cash. You've got clearly a pipeline full of opportunities here. But what keeps you up at night right now?
What keeps me up? It's been a little bit different, right? So if you ask me that question, and you always ask me this question, but we
Yep.
just haven't talked in a while. But at one point there, even though we've always been strong in working capital, and we're really good stewards of cash here. I think that's one of the things that caught the attention of Canaccord and Raymond James. It's hard to grow a business and keep it profitable and have a good cash flow. So we've done a good job there, but still, there's always things that that are around the corner that we may not be planning for, such as a guy by the name of Donald Trump issuing tariffs to every country. Those sorts of things, they can be difficult to plan for. I seen it coming, and we moved as fast as we could to get all of our OEMs out of China and into most of it is in Vietnam now. So we've made that change. We got some going into Thailand. We've got some in we're basically, bottom line is that we've moved away from China. So that's actually helped us increase gross margin, but it's been a weird quarter. Like quarter two was weird, because Trump really kind of slowed everything down. Our customers, they put projects on hold. It wasn't like we were losing projects, but what happened during that period was that the tariffs coming out of China were so large that we had to move out before we wanted to ship product to them, right? So those types of things can keep me up. The capital side, the capital market, that keeps me up, right? You know, the money not flowing into the business. It's been brutal for three and a half, 4 years, and as you well know, in the microcap space in Canada. And but now we're getting more, a currency that is maybe a little bit more aligned with the potential in the business and the value in the business, right? Which sometimes is not just shown on the financial statements, it's everything underneath the water that we're building, So, this yeah, no, I won't touch on that, but this big project that we're working on is a great example. But another thing that keeps me up is it's how much do we invest? This is probably one of the bigger challenges right now, right? We got a nice amount of cash to grow the business, and we got good momentum in the stock, but how much do we invest? How fast do we want to accelerate? And then what is going to be how fast is that return going to be? Because I find that these markets can be ruthless. And so, like I say, we've been good steward of cash, showing good growth. But we got to invest our money smartly. And we're attracting really good people to our team, Paul. Like we just hired recently two top-end experienced transit territory managers, and they're already developing. One came from a competitor, and one came from an industry partner. So just investing in good people, driving that recurring revenue, that keeps me up, right? Because I know how valuable it can be to our currency if we can land more and more recurring revenue projects. And then there's the whole integration play. I haven't talked about this during this talk, but we've got the ability, or the interest, I should say, and the ability to integrate with there's three companies that literally could change the face of this business. Reason is that fixed site surveillance has been disconnected for years from the mobile piece because in our market, wireless hasn't been a thing. Now there's a paradigm shift to wireless. Once that happens, we can talk to our devices and integrate with fixed command centers. And now you've got one command center for both mobile and fixed. So in the case of, let's say, a Vigilon of Motorola, they own 35% of the addressable market in K-12 in schools. And when a student steps onto a schoolyard, their cameras and their AI pick it up, and they track that kid all through the school. But when he leaves, or he or she leaves and gets on a school bus, that's where they leave it. So an integrated solution allows them to basically track when the kid steps on the school yard, into the schools, leaving the school, and all the way home. That to me is a huge opportunity. They have 5,200 systems integrators around the world. So that's a new potential distribution system for us. On top of that, there's other large city enterprise solutions that we want to be doing the same. And our transit, some of our transit wins are driving us together because the transit agency is using large enterprise software solutions for security, and they want us to integrate. That's the best of that is the best situation we could have, because if the customer wants it, those two companies are going to have to come in and provide it. And once that gets done, now we can open up any city with their application and ours to go after not just transit agencies, but any other type of city vehicle that needs the mobile security where the vehicles are integrated with the fixed. So when you say, hey, what's keeping you up at night? That's one area, right? Because we'll need to invest in engineering to make damn sure that we focus those engineering teams on those projects and don't stretch those resources too thin. But our team's done a great job, Paul, of getting us from where we were when you and I first met to where we are today. It's taken time, but
Sure.
it's what we've learned along the way is to stay laser focused
Yeah.
knitting and just deliver results.
Yeah. And amazing the momentum you have right now. That's one thing that certainly changes. It just seems like there's a lot more in the funnel and things well, quite frankly, it keeps you up at night because there's just so much more going on. So I mean, congratulations on that. But Doug, a couple of times there, you mentioned the word currency. Every time I hear a CEO talk about that, it sort of lends the idea that perhaps there's some M&A opportunities with a higher share price. Is that the case? Are you guys looking at opportunities on the M&A front?
Yeah, absolutely. I think you know how we got into SEPTA. I
Yep.
tested the waters with our team in M&A, and we turned a $300,000 M&A opportunity into over 40 million in revenue. So it's those are the type of those are the type of returns that any CEO would love to
Hmm.
have, right? So the answer is yes. Um, but frankly, we're laser focused at the moment on the organic model. But as we move forward, a successful build out of a billion dollar, valuation typically comes with some M&A, right?
Hmm.
Absolutely, right? So
Hmm. Yeah.
good solid organic growth, and then look at, okay, what makes sense from an M&A standpoint to
Hmm.
leverage. How do we go from one by one, one times one plus one equals 10, right?
Hmm.
That's what I'm looking closely at.
Yeah.
And yeah, so the
Yeah.
answer is yes,
You're
but
looking. Yeah.
I don't have anything, in
Mm.
my gun sights yet that I'd
Yeah.
be willing to talk about where we're going to fire our guns.
Understood. Understood. So the money you raised recently here, though, where do you expect to write the checks first? Like where is the spend coming? Is it working capital? Are you going to hire people right now? What's that first couple dollars going to get spent on?
Well, because of the tariffs, we made a significant commitment to inventory, right?
Hmm.
To make sure
Hmm.
that we got a lot of inventory coming in that didn't get hit with any type of higher tariffs, right? So we took that on. Now, having said that, I had the facilities in place and the support from the OEM and our banks to take that on. It's cost money, obviously.
Hmm.
So we're looking at carving, some of the money that we just raised to take care of inventory and save money, help us, not be paying too much interest and hurting the bottom line. That's one piece of
Hmm.
it. But the bigger piece is going to be on people. We're attracting more people. We want to accelerate growth using that money. That's the biggest thing. So how do
Hmm.
we do that? That integration piece, Paul, that has to be a big focus of ours. It's just got so much, in my opinion, it's got so much potential to lever distribution globally that we don't currently have,
Hmm.
right? So, and the fact that we have the pieces of the puzzle in place at the end user level, like I was saying earlier, that are driving our two technology companies together to create more value for them, it just doesn't get any better than that, right?
Hmm.
So we're going to be investing on that side, and we're also our company is pretty darn organized, but we still have infrastructure that we need to put in place to save
Hmm.
time. And so we're in the process of investing in a new ERP system or CRM system that's integrated to our ERP system.
Hmm.
And it gives our people out in the field the ability to do things from an operations standpoint that just flat out save us time. And that might seem a little bit boring, but the reality is that it allows us to, save time, less people on the operations
Hmm.
side. And I want to get us to, eventually here, like we've been able to prove that we can drive a 20% operating profit with the right
Hmm.
margin mix and operating cost. And I want us to get to that, get back to more consistent quarters that have higher operating margin. Because I believe that our company, what the investment, what the institutions like about us is that we've been pretty darn efficient, right? While
Hmm.
growing. If we can grow our top line by 20 or 30% and be moving into some new verticals, um, and continue to drive that bottom line, I think we're going to be highly sought after by institutions. And we're
Mhm.
seeing it already. We're seeing it already. Like we have more institutions in us now in Canada than we have in the life of the company, all
Mhm.
in just one financing.
Mhm.
So and they're all got appetite,
Yeah.
right? So hey,
I,
listen,
I, I,
I'm preaching to the choir. You told me this back in 2017, right? But it just never happened.
yeah.
Partly because of our performance and the fact that we are a completely different company today than we were back then, right?
Yeah.
So,
I
but
wanted to talk about that. Like, you've gone through what we call institutional discovery, right? You go from institutions not having a clue who you are to now all of a sudden they know, all about you pretty quickly. How do you perceive the change in investor, sort of the kind of investor? Are the phones ringing more from investors? Obviously, you turned away money. You've done a very successful bought deal financing. What do you think that does? As far as that changeover investors, what does it do for the business going forward?
Uh, yeah, that's a good question. I think that there's a few parts to that though. So I went on. I'll just digress here for a moment.
Hmm.
When I went into Toronto on being hosted by RJ, it wasn't a financing roadshow. It was just an introduction roadshow. Nobody.
Hmm.
It was really surprising to me that nobody knew about us in Canada. There's more
Hmm.
people and institutions that know about us in the U.S. than know about us in Canada. So it did that trip and then followed it up about a month later, and both Canaccord and RJ just did a fantastic job of bringing a lot of groups to the table,
Hmm.
and so the fact that there was a few things moving at the right time. So, for instance, the fact that we were 300 systems last year, MDCs delivering revenue, and now we're already up to 3,500. That whole subscription model, and we had good
Hmm.
news flow. Um, yeah, I think it was just a combination of things, and the fact that the graph that you're looking at there, or the slide that you're looking at there, that's what they got to see. So
Hmm.
um, it was just the right company, the right performance at the
Hmm.
right time, and so it's is my phone ringing? Yeah, absolutely, it's ringing. It's
Hmm.
you know it, there's an enormous amount of interest. I've got 20 different funds in the US, and this is before I go into Boston,
Hmm.
and every one of them want between 1 and 9% over a period of time. So that's why I say there was 33 million shares bought in the last 6 months in the US, and that's helped to strengthen the currency, because sometimes
Hmm.
if you only got Canada in there,
Hmm.
um, the stock can slip, right? So
Yeah.
I think we got a real good structure. How I
Yeah.
see that moving forward is that for the first time in our history, and I think you and I thought it might happen a little faster when we got together in 2017, but for the
Hmm.
first time in our history, I really feel like if we continue to do what we're doing, we can go back to the market and tap the market when we need it,
Hmm.
right? To even
Yeah.
do more future growth. I don't
Yeah.
look at 16 million as a lot of money to really ramp up an M&A type strategy, because some of the
Hmm.
companies, I wouldn't want to blow all our cash on that, especially when we've got so much going on the organic side. Like
Hmm.
we've got two projects alone in the sales funnel that are one's 70 million and one's 100 million.
Wow.
And when you start, if we're successful in just one of those, um, it's got to be funded. Now, I've
Yeah.
got some real strong relationships with OEMs, and it depends on the timing of the delivery. So I feel comfortable that we can finance it without going back to the market. Um, but we'll see, right? But
Hmm.
so I look at you know research, right? I mean, the
Hmm.
guys in the institutions in the US know research is coming now, right?
Hmm.
So that's a big piece for a lot of them, is that some
Hmm.
of them won't invest unless there's research done.
Yeah.
So
Yeah.
yeah,
Oh,
so that's actually, I think that's going to affect more institutions coming into our deal.
Mm.
Where the currency goes will be probably determined by how the company is performing,
Sure,
right?
of
And
course.
yeah, so
Yeah.
it's but Paul, some of these projects, like the one I was talking to you offline, the investors are waiting for that news release,
Mm.
and but there's more to it. There's so much more to it. Don't forget what we did at SEPTA. Like we started at SEPTA with basically an $800,000 contract, turned it into over 40 million so far. And when you get into some of these tier one accounts, the revenue can be pretty darn significant on technology refresh alone.
Mm.
So that'll be part of our M&A strategy as well, is that if we get ownership in some of these larger accounts, I'm going to be looking at bolt-on technology type companies that are already may not be in, but because we've conduit in, that could be part of the strategy
Mm.
to acquire a good company to drive that revenue, right?
Mm.
So
Yeah. Yeah, and what keeps coming in my mind is the momentum that seems to be building into not only the share price, but the business itself is driving a lot of other opportunities to do more things. Doug, I mean, you come a long way, obviously, in the last sort of 7, 8 years since I've known you. But what do you think the business looks like 5 years from now? And is there an end game here? Like, is this a business that you want to see acquired by somebody else, or is this something that you want to grow into something significantly bigger and be the
Well,
acquirer?
okay, so I'm going to ask a question. I'm going to answer a question with a question.
Yeah.
So you've been following Kraken, right? Did
Yeah.
anybody believe that they would be sitting at $1 billion valuation?
Not when I started looking at them. That's such a far leap. I think no, but that's
Right.
the beauty of this. I think that becomes the question, right? And I love it when I see a Canadian company be successful and gain technology advancements and market share and things like that. There's nothing stopping Gatekeeper from becoming $1 billion business other than
So
time and effort.
exactly, totally.
Yeah.
So you know this, Paul, because you helped me with that financing back in 2017. And if you remember, the reason I had to do that financing was because SEPTA drove it.
Hmm.
They were
Hmm.
about to award, and they told me, they said, "Hey, your balance sheet is not big enough. We're
Yeah.
not comfortable giving you this contract." So we went out, we raised the 4.2. I think we left like 3 million out there at that point in
Hmm.
time, took
Hmm.
4.2, and that got us the contract. Well, this largest transit agency in North America, I figured if we had any kind of chance of winning that, we needed to have a bigger balance sheet.
Hmm.
Well, that wasn't the case, right? So um, I don't know. I've always, so along that thread of thought, I've always felt like if Gatekeeper is at some point in time is going to have to be part of a much larger company in order to compete against
Hmm.
some of these larger deals, such as a potential $20 million contract US, by the way,
Hmm.
out of the largest transit agency, right? So,
Hmm.
but that's not the case. So I'm struggling now. I'm kind of struggling um, with that concept that I had, right? Because
Hmm.
I think that depending on the timing of some things happening, we may not need to be part of a larger entity, right?
Hmm.
So getting acquired, look, you know what the vision here is. I want to be $1 billion data company, right?
Hmm.
And so we'll see how long it takes, right? But
Hmm.
if somebody would have told me, that maybe 30 or 40 days ago where our stock's trading at 40 cents that we were going to do a bought deal financing, at a buck 20, I would have probably said, I think you're on, I don't know what you're drinking, but it's not the same water I'm drinking.
That's right. It's not diluted yet.
But you
Um,
just never know, right? You just
yeah.
never know.
No,
And I think,
exactly.
yeah, so I think
Yeah.
there was a couple of companies in Canada that a lot of these guys, institutions were invested in. One, obviously, Kraken.
Mm.
And let's not forget, Paul, that Gatekeeper has a cage code. Our systems were flying on the AC-130 gunships, recording those long-range sensor systems.
Mm.
It's all part of our past. But we still have military contracts. We just don't talk too much about it
Right.
because I want to keep our investors laser focused on our core business.
Hmm.
But you might see us start to, as we grow, we'll have capability to expand into some other areas. But the last thing I want to see us do, and I did this back in when I was private, knowing 100% of it, I almost broke the company because I stretched us too thin into areas. And that can work well as long as everything goes well. But when things don't go
Yeah.
well and things like a debt crisis happens,
Yeah.
that
Yeah.
can wreak havoc to an organization, right? So
Yeah. Exactly. That can
we're
hurt.
staying laser focused. K to 12 has an enormous opportunity right
Right.
now. It does. There's so many vehicles there. There's technology refresh. There's the move to wireless,
Mm-hmm.
the evidence management piece that we're just starting to, get some headwind in. I want to be investing more into that market.
Mm-hmm.
We need more resources and to drive revenue. So 5 years from now, I see us being a more dominant player in K to 12 and transit, and us being more global with lots of recurring revenue. Where the valuation ends up, I hope it's I hope that we're $1 billion, right?
Mm-hmm.
That's the goal. That's a number I've got, and
Mm-hmm.
everybody's got to have their number, right? So that's
Absolutely.
mine.
Yeah. Yeah. Okay. Last couple questions here. What right now gets you the most excited when you look forward in the business? What is there? Is there a product? Is there an opportunity? But what gets you the most excited right now?
Well, I've always believed that Gatekeeper's valuation our valuation was not where I believe where it should have been. The last July, I think it was July 23rd. I have to look at when we put that press release when we closed, but I was really excited about that.
Mm-hmm.
That was frankly, in my opinion, it was a masterful financing. It just doesn't happen like that very
Mm-hmm.
often, where
Mm-hmm.
you get your bought deal financing done, couple offers on the table, and we brought Cormark in, and with a piece, and
Mm-hmm.
so expecting hopefully getting research out of them. RJ, there's a strategy there. Cormark or Canaccord, there's a strategy there.
Mm-hmm.
All of that strategy, Paul, is about getting into the U.S. market. It's
Mm-hmm.
about getting to the U.S., right?
Mm-hmm.
Because there's just so much opportunity there with with investors, whether it be institutions or family funds or what have you.
Mm-hmm.
So I'm excited about what we've done in the capital markets, but I'm
Mm-hmm.
I'm I'm more excited about what's going on in the business, right?
Mm-hmm.
It's the whole issue. Like if you look at what happens, and it's really unfortunate, but when children are injured in and around school buses, it goes viral pretty quick, right? So this whole idea of being able to get live view as fast as possible,
Yeah.
there's just enormous opportunity there, and the same thing in transit.
Mm-hmm.
So the
Yeah.
business itself, I think it's a really good business model. Get them using our technology, get them using the MDCs, collect the data, and then come in on the back end with subscription model and then drive it that way. Because
Mm-hmm.
if we went the other way, a lot of the market wouldn't be ready for just a full subscription model because they've got capital budgets, right? And OpEx. But I think that's a good strategy for us, and I think it's going to eventually drive a higher valuation for us as we drive revenue.
Mm-hmm. Doug, as investors, if you were sitting in our seat right now, what do you think makes the most sense to pay attention to? Is there any kind of catalyst or event that you think we should be watching out for?
Yeah, I'd watch out for a news release with major OEMs on the train side.
Hmm.
That's going to be a catalyst. I'd watch out for a news release on major transit agencies and big projects. Um, and I'd also like the the investors have been wanting like large projects, another tier one like a SEPTA, but um, that's just one piece of the business, right? Like
Hmm.
really pay attention to some of these tier one accounts that we have in the K to 12 market. And what we're looking at doing as we leverage into as the company grows a little bit here and we can add more resources, those K to 12 companies or districts, they operate at the county level, right? So I think you're going to start to see us leverage those counties into other areas such as fire truck, ambulance, and law enforcement, and so we're starting to see a little bit of it now, but I would encourage your investors just to read the news releases that we put out. We're typically a company that doesn't over promote, right? But there's been a lot going on here and a lot to talk about. So we've tried to share that, especially around the subscription model as it's gained momentum. So we tried to share that with more news, right? And yeah, I mean, those are the things I would pay attention to on the operating side. And I wouldn't be too concerned about the lumpiness in the quarter, especially now that we're cashed up. We have to invest that cash, right? So that's the tricky part, as I said earlier, is how much are we going to spend? Where are we going to spend it? And we know I know where we're going to spend it. So, it's really the timing of bringing these projects in, and then when does it hit the income statement, right?
Yeah.
Yeah.
That makes sense. I mean, so much of this business has been you have to invest in either R&D or people or opportunities, and then you get the payback. And clearly, we've seen that you've gotten the payback on that. Doug, this has been great. I always love it when we get an opportunity to catch up like this. And again, I can't congratulate you enough over the success that we've seen since we've been following you guys. Is there, as we leave here, is there any key message you want to make sure you want to sum up anything that you want to make sure investors walk away with today?
I think just keep following us, right? We're a really easy story, I think, to understand. We got AI out the edge, and by the way, I didn't really talk too much about our money we're investing in AI, but that's certainly an area that we're investing in. We're going to expand our product line, look for those types of news releases, and we want to deliver performance, right? I want to be known as a company that is actually, not just telling a great story, but actually the underpinnings financially are fundamentally sound that we can, we can leverage off of and grow that top line, right? So it's going to be it'll be interesting to see when this company hits 60, 70, 80 million in revenue. And it's coming. It's just a matter of time when it happens, right? I'm a big believer in that.
Fantastic, Doug. Again, congratulations. I mean, it's not been a straight ride, but it's certainly been a ride to a good spot here. We've been speaking with Doug Dyment, CEO of Gatekeeper Systems. Symbol is GSI in the Venture Exchange. Doug, as always, a pleasure to chat today, and look forward to the next time we get to talk.
All right, Paul. Have a great day. Thank you.
You too. Thanks, and bye for now.